With us on Reporter's Diary, crude prices are rallying sharply today after 2 oil rigs were evacuated in the Gulf of Mexico ahead of an approaching storm in that region. Now, the Brent crude has shot past the $79 per barrel mark, while WTI NYMEX is up close to 2% and is now trading above $71 a barrel mark. Manisha Gupta is here with the details. Manisha, crude getting a big push from the rig evacuations, but India also sticking to its guns on importing Iranian oil. What effect do we expect on fuel prices going ahead?
Well, thank you so much for that. Well, yeah, we have seen crude prices, Brent, that is inches away from that $80 per barrel mark, and that clearly has taken the Indian retail prices to all-time highs. We have seen diesel and petrol continue to gain up to all-time highs for a 10th straight day today. Of course, the cues are coming in from the global crude oil markets as well, where the prices have gained 10% in last 2 weeks itself. The latest trigger, as you mentioned, has been about the Gulf of Mexico. A couple of platforms have been evacuated ahead of the Hurricane Gordon landfall today. And remember, 16% of US fuel comes out of Gulf of Mexico. So that is where the potential concerns are from. The Iran sanctions is something that has been adding premium to prices as well. We already have seen 1 to 1.5 million barrels go offline from Iran as the loading and exports have declined. But India clearly sticking to its guns as the government has told the state refiners to continue to import from Iran if Tehran is able to manage and ensure the cargoes therein. So it is really India's tall stand, as we have seen, against Washington directives. It is the second straight country to do that post-China. So 2 major Asian countries taking a stand there. But at this point in time, the kind of gains that we have seen in crude, most bankers, international experts will tell you that further gains from here on is not ruled out. A level above 80 also is something that they're watching out for.
So further gains can't be ruled out. Thank you so much for those details, Manisha. And moving on to Dalal Street, which continued to trend lower for the second consecutive day, with the broader markets taking a heavy hit. So let's bring those charts up for you. The Nifty breached the 11,550 mark, all the way down to 11,500, from where it reversed losses to end with cuts of 0.5%. Now, the Sensex shed 150 points in trade. Meanwhile, broader markets underperformed, with banks shedding more than 360 points. It was a bloodbath on the mid-caps, that index ending 560 points down today. And in the currency market, the rupee continued its downward trend, closing at yet another record low of 71.58 to the dollar. After opening at an all-time low of 71.28 to the dollar, the currency recovered a little bit before hitting fresh lows again versus the greenback. Now, the street is pegging a target of 72 to 73 for the rupee in the near term, as it remains under pressure from surging crude prices globally. Now, market regulator SEBI has slammed the section of foreign portfolio investors of Indian origin, which has warned of huge fund outflows due to stricter disclosure norms, barring NRIs as beneficial owners of FPI funds. Now, in a rare early morning statement, the market regulator said, and I quote, "It is preposterous and highly irresponsible to claim that $75 billion of FPI investment will move out of the country because of SEBI's circular issued in April 2018. And more on SEBI's FPI circular. A day after Indian origin fund managers hit out at the circular, Economic Affairs Secretary Subhash Chandra Garg has reacted to it. He said that the guidelines issued by the market regulator already exist and there's much ado about nothing. Sapna Das joins us with more details. Sapna, what else did the DA Secretary say about the circular?
Well, he has basically clarified that there is already an existing investment limit of 5% as far as NRIs are concerned, their investment limit into Indian securities. The issue arises when NRIs start registering as FPIs to also manage the funds. So the indication is this, that both cannot exist together, in the sense that you cannot have an economic interest as well as manage funds. That is the issue, basically. So, indicating that probably a status quo as far as the circle is concerned. That's what the indication is from the government as of now.
All right.